as everything is happening, we shall keep duality. So, as all transactions are coming, we shall keep that particular duality concept, the dual effect, that each transaction that comes, it will impact this equation in two ways. And we saw that a particular transaction could affect one side of that equation and another side of that equation. Or if it doesn't do that, then it may affect only one side of the what? Of the equation. But if it affects only one side of the equation, then there must be that opposite nature, that one side is increasing, another one is what? Is reducing. That is what we talked about. So from this, we say, from duality, that's why we get double entry. Are we together? Because duality and the accounting equation are so traditional that as things are happening, we simply put them and show their effect on the accounting equation in terms of figures and deducting plus minus, plus minus. But we could do that plus minus in a much more organized and modern way. So the plus minus can be done in a debit credit format. Debit credit format. Are we together? So that is where we came in with the double entry concept. That the double entry concept stemming from duality simply asserts that for every debit, there must be a corresponding equal but corresponding, sorry. For every debit, there must be a corresponding equal but opposite credit transaction. Are we together? Now, because of the duality, the two nature, we are also having two sides, debit and what? Debit and credit. What we call a debit, the debit is the left-hand side of that equation, and the credit is the right-hand side of that what? Of that equation. If it is a T account, then a debit will be the left-hand side of that account, and the credit will be the right-hand side of that what? Of that account. That's where we say that we shall have a debit and a what? And a credit. The same way we say that we have duality in terms of resources and claims is the same way we want to do away with some bit of, with the traditional saying that we have economic resources and we have claims and then reduce them and increase them. We rather say that where we have resources, we have a debit, and where we have claims, we have a what? We have a credit. Are we together? That is where we began from. And we said for us to say that assets are debited, it means when that particular account is increasing, isn't it so? That's what we say. It is its normal balance. So what we call a debit, if we say that assets carry a debit balance, it means that that is their nature when they are actually being recognized. Are we together? And everything on the right-hand side, be it equity and liabilities, they are credited, meaning as and when we are recognizing them, we do what? We credit. Are we together? Talk about recognition, it means increasing. Are we together? Whenever it is increasing, you credit. So from there, we see that we have debit, credit. So debit must be equal to what? To credit. Debit must be equal to credit. And because of that equal signs, it also shows what we call the opposite nature. Are we together? It brings the opposite nature. All right. So from that same, assets are equal to equity plus liabilities, we are saying that this side is debited and this side is credited. We are saying that if assets increase by debiting, then by their opposite nature, if they are reducing, then we cannot debit again, because double entry in its nature must have that opposite sense. Are we together? So if assets are increasing, then when they are reducing, or when we are de-recognizing them, again, we cannot take the same entry. Are we together? It must be the other opposite entry, and there are two of them, the debit and the what? And the credit. So meaning what we call an asset, as it is increasing, we shall what? We shall debit. And as it is reducing, we shall credit. Are we together? So whenever you're faced with a scenario or a certain transaction, when you read it, if you find out that there is an asset, then you must know that you have to recognize that asset by debiting it. Are we together? All right. And then anything called equity and liabilities. Let me start with liabilities. If it is a liability and it is increasing, then we do what? We credit, because everything this side on the right-hand side, we credit it. And if that liability is reducing, we shall instead do what? We shall debit. Are we together, guys? And then equity. Equity. Both equity and liabilities are claims. Are we together? And all claims carry a credit balance. Are we together? So meaning as they are increasing, we do what? We credit. And if when they are reducing, we what? We debit, we pass the opposite entry. So when equity is increasing, we credit. And when equity is reducing, we do what? We debit. Are we all okay up to that point? I decided to go back because certainly this is going to be my last day where I'm going to talk about double entry this comprehensively. Because after ledgers and the trial balance, the rest shall be assumed knowledge when we are going forward. Are we together? This is where we are going to practically apply double entry. After this stage, the rest we shall be talking about entries, journal entries, debit this, credit what? Credit that, full stop. So if double entry was still a problem, let us understand it here and now. Okay. So after understanding this, if this is okay, then this is where we are right now. It is the normal accounting equation. Isn't it so? It is the normal accounting equation that resources are equal to claims. That is it. Going forward, after you start your business, all transactions are going to lead to changes in these. Are we together? Changes in resources. And we have seen a resource can either change by increasing or what? Or reducing. And we have said, if a resource is increasing, debit. If it is reducing, credit. Are we together? And a claim can either change by also increasing or what? Or reducing. And we have seen that. But we need to expand more when it comes to equity. Yeah? Because owners' claims are something over and above capital. Are we together? We looked at I think it was our last topic of the conceptual framework, talking about capital and capital maintenance. The reason as to why we started this entity or this business is we want to make profits and what? And profits. And as the business is making profits, that increases the owners or the shareholders' claims. Isn't it so? Isn't it so, guys? As the business is making profit, that profit increases the shareholders' claims. What we expect from that business increases. Are we together? Because number one, when we make a profit, we are either going to reinvest it or we take it out. Are we together? So meaning, profit under all circumstances shall fall under equity. It cannot be a liability. Not so? So equity is a broad term to signal very many things. To start with, capital, the money that you start with your business. Are we together? It is part of your own claims. Number two, if you make any profit, that profit, yeah, that profit is also part of your claims. Meaning you can either choose to reinvest it as the owner, or you choose to take it out. Are we together? But even when you're taking it out, when you take out profit, it means that you're also taking out a resource, because that profit was in form of a resource. Are we together? Be it cash or a receivable. Are we together? I don't know if we get so far where I'm trying to go. Okay, so we are having two things. We are having capital in there, and we are having profits. Profits, it is just a subject of income and expenses. Isn't it so? Income and what? And expenses. That is profit. You just get all your expenses, less them from what? From incomes, and you will get profit. Are we together? So this is a question of incomes and expenses. Now, this is now where some bit of logic comes in. Because we said equity is a claim, and equity will increase by crediting, not so? And it will reduce by debiting. Yeah? Now, if two things will increase your equity, because capital, when you put in more capital, equity increases, not so? And if you make more profit, equity does what? Equity increases. But as we are saying that to start with, before I even go to profit, if capital increases equity and equity increases by crediting, then even capital increases by what? Isn't it so? Yeah? Capital increases equity, equity increases by crediting. So even capital will increase by what? By crediting. Are we together? Okay. Profits will increase your equity. So meaning profits are also credited. Are we together? Profits are credited. And what makes your profit to increase? Income. Are we together? The more you make incomes, the higher the profit. Isn't it so? The higher the income, the higher the profit. So meaning incomes in their own capacity as well, they will increase profit and profits will increase equity. So meaning even incomes shall also be credited. Isn't it so? As they are increasing. We are just deriving the entire double entry where it's coming from. At this stage, it seems to be a bit mind-blowing, but I don't think it should be something so hard. Okay, is it okay so far? So incomes will also increase by crediting, because incomes increase profit and profit increases equity. Then expenses, that's where now we are having a problem. Expenses will reduce your profit. Isn't it so? Expenses will reduce your profit. And if it reduces your profit, then it means that it is also reducing your equity. Are we together? Are we together? Meaning, as expenses are increasing your equity, isn't it so? And equity reduces by debiting, not so? So meaning, as equity is reducing by debiting, expenses are also increasing. So meaning expenses have to be debited because of the impact that they have on equity. Are we together? As an expense is increasing, debit it, because that is what it will do to equity. Are we together? As it is increasing, we debit it, because that is the effect that it will have on your what? On your equity. It will reduce your equity. And equity reduces by what? By debiting. Now that's why we get these 5 elements and how they behave in double entry. That assets debited when they are increasing. Are we together? The reverse is true when they are reducing. We credit, isn't it so? Liabilities, credit. Are we together? Incomes, credit, because they increase equity. Capital, credit, because they increase credit. They increase equity. Expenses, debit, because they reduce what? Because they reduce equity. And also drawings. If you have a drawing, debit it, because that drawing will reduce your capital. Are we together? Hence reducing your equity. So are we together where we are? So our work is one. For every transaction that we are going to go into subsequently, we should assess and ascertain duality from it. What elements are affected and how are they affected? Are they increasing or they are reducing? Because we said in the entire world of accounting, there will be 5 elements. Are we together? There will be 5 what? 5 elements. There will be assets, there will be liabilities, there will be incomes, there will be expenses, and there will be capital and all its components. Are we together? That is it. It can never be anything outside that. It has to be one of those. So meaning in any transaction that we are going to see and any transaction that you will meet in the future, it will lead to any of those 5. So it must have any of those 5 elements. Our work is to pick out, when you read a transaction, we say that leads to an expense, that leads to an asset, that is a liability, that is income, that is an expense. Are we together? Then we shall simply be assessing whether the asset is increasing or it is what? Or it is reducing. A liability is increasing or it is reducing. Yeah, that is it. you're having trouble differentiating what an asset is and what a liability is, you may need to go back to the conceptual framework and acquaint yourself with the definition of what an asset is and what a liability is, what an expense is, and what an income is. Assets are easy because if someone says it is a present economic resource, very easy. Not so? Present economic resource. Are we together? As a result of past what? As a result of past events. Are we together? So meaning anything that you see as a resource, and what we call a resource, it has the ability of generating economic benefits that are going to flow to the entity. Are we together? So it can be cash because in itself is a resource. Bank, it can be trade receivables because we're expecting them to pay you in the future. Are we together? Can be long-term assets. We may not expect cash from them, but we expect a benefit coming out of them. If it is a machine, we shall use it to produce more. If it is a car, it will transport us. Those are all benefits. Are we together? But those benefits must be flowing to the entity. Are we together? The minute those benefits are flowing outside the entity, then it means that you have lost control. Are we together? You have lost control. And when you lose control, de-recognize that what? De-recognize that asset from your books, because you cannot tell users that you have an asset, get benefits out of that, benefits that are coming from that asset and not flowing to this entity. Are we together? So that is it, guys. That is what so far we have looked at in the world of double summarized. To know more about it, you may need to get that carry coding and try to look through it. And also maybe trying to get as many examples of assets, liabilities, expenses, and whatever as possible. Are we together? Get to know them, get to understand them, get to know the reason, because someone can say rent is an expense, but you need to know why is rent an expense. Yeah? Why is rent an expense? And it is all from that definition in the conceptual framework. Are we together? Yes. Yes. There's where we have yes. A difference between capital expenditures and revenue. We are going to look at that under our ND adjustments. Yeah. When we are looking at property, plant, and equipment. It's okay. Just a few lectures from now, because that is the next topic after ledgers. We shall differentiate between the two. But certainly that is not capital. For sure. Someone says capital expenditure and revenue expenditure. That is not capital. We don't mean capital. We don't mean capital. Are we together? But for purposes of everyone, we shall defer it to another class. Okay. I think if everything is okay, we can start doing the number. Not so? Unless anyone has a question, both physically or online. Before we start, we look at that question. Otherwise, I think we should dive into what we are supposed to look at today.
Good evening, sir.
Yes, good evening. This is more.
Did we talk about the errors that do affect and those that do not affect the trade balance?
Not yet. Not yet. Still, that is also going to come. I'm planning to bring that entire discussion after even preparing our first set of financial statements.
Okay, thank you.
Yeah. I'm planning to bring that discussion then. And there is a reason for it. There's a reason for it. Because even if we talk about them after the trial balance immediately, I will be forced to do them again. So it is better doing them at what? At once. But it's okay, everything shall be looked at. All right. This is our question. The question is that record the transaction. Oh, wait. Okay, transactions. Okay. So record the transactions in the month of January above in the respective journal ledger accounts. Now, before going any further, I want to underline the word journal ledger. Yeah? I want to underline the word journal ledger accounts. We say that we have two types of ledgers. We have a general ledger and we have subsidiary ledgers. Now, the examiner is so specific. The examiner wants general ledger accounts. Are we together? So meaning, even if you find, for example, this business, they are buying goods on credit from ABC Limited, you're not going to draw ABC Limited's account or ledger. Are we together? Because if you draw ABC Limited's account, then that is going to be a subsidiary account. So what the examiner expects from us, if he says general ledger, is that anything to do with the payable and the receivable, put it under one account, one umbrella, irrespective of who we have sold to on credit or who we have purchased from on what? On credit. Are we together, guys? That is general ledger. If he says general ledger. And if he also adds subsidiary ledgers, then you may. And I think if he says subsidiary ledgers as well as an addition, then it means that for all your receivables and all your payables, you have to draw their separate ledgers. But, and that is a very big but, as you're drawing their respective accounts, it doesn't waive you of the responsibility of drawing their general ledger. Are we together? So as we are doing this particular number, we are going to do it in twos. Number one, I'm going to do it as though we are also required to draw subsidiary what? Ledgers. Because either way, if they tell you not to draw subsidiary ledgers, then it becomes very simple. Just ignore them. Are we together? The rest stays the what? The rest stays the same. That is what we are going to do. And balance them off. And balance them off. Of course, after balancing them off, they want us to also prepare a trial from the ledgers that we have prepared in one above. So it's going to be some bit of a long journey. But I'm sure with the time we have, we shall be able to finish. So this is a set of information. It has transactions. In these transactions, we are going to get very many ledgers, very many accounts, isn't it so? You don't know how many you're going to get, and you don't know how long each ledger is going to be. Isn't it so? You don't know how long. Of course, after doing very many numbers, you will know. Look at the number, the way it is and the way it is structured. You know that your ledgers are not going to be very what? Very long. So meaning on a page, you can put like 3-4 ledgers, 3-4 accounts. Are we together? Because you don't expect that information to be long. But that comes with practice. If you do quite a couple of numbers, you'll be able to see that. I think on a page I can put 4 ledgers. Are we together? But it doesn't hurt also if you put a ledger on a page. But now if you're in the exam, how many booklets are you going to have? Because the booklet has how many papers? We don't know. I don't know. Are they 8? Papers, not pages. Okay. But if you're to put a ledger on a page, then certainly you're going to be wasteful. Isn't it so? So what we are going to do, and it depends on the transactions. If you're to look at these transactions, if you pass through them for the first time, you will see accounts that are repeating themselves. Now, accounts to do with cash and bank, you expect them to be repetitive. Are we together? Because you'll pay expenses using cash, using bank. You'll purchase using cash, using bank. You'll pay off liabilities using cash, using what? Using bank. So you expect if you're to draw your cash book, the cash book should be a bit long enough. Isn't it so? And then the other ledgers, really, if the exam is supposed to be doable, the ledger should be in about, at most, 6 lines. Yeah, I think. And that all depends on the transactions that have been given. We have to look ahead because we also don't want to be so untidy when we are doing the work. Yeah, want to be a bit tidy, and at the same time, we don't want to be wasteful. So I think from the little experience, I say that for every ledger number, if they are to set a ledger for you to come up with a general ledger, each ledger you may choose, apart from a cash book, you may choose to draw about 4 ledgers on the page. On the maximum, are we together? But on the minimum, let them be 3 what? 3 ledgers on a page. Okay? Yeah, 3 ledgers. Balance them off, but on the page, make sure that there are 3 if you're a person who is risk averse. But if you're a risk taker, then you can put 4 ledgers. Yeah, on 1 page. Let your cash book take at least half a page. At least half. So meaning if you draw a cash book first, and we say the cash book, you can even draw it horizontally if you wish to. And I think that should be the case if you're to really draw a 3-column what? A 3-column cash book. Then you have to tilt it a bit and you write it in on a landscape format. Because if you use the portrait format, the way I see the books, it may not be enough. Maybe, you know, people have very nice and neat handwritings. Of course, you take these assumptions basing on your own handwriting. All right, so I think we are going to start. We are going to draw these ledgers. For the cash book, we are going to draw it right away. It is recommended because when you have such a number and you're having transactions in cash and bank, instead of drawing one cash account and a bank account, draw a what? Draw a cash book. Are we together? Draw a what? Draw a cash book. And that's one of the reasons that's why we looked at a cash book first before what? Before ledgers. So what we are going to do for cash transactions and bank transactions, we are going to draw a cash book. But this time round, we are drawing a cash book not as a journal, but as a what? As a ledger. Because we say the cash book is both a journal and a what? And a ledger. Are we together? So meaning our double entry is going to be done in that cash book. Are we together? The way you're looking is as if we are talking about a cash book for the first time. No, cash book in ledgers, it is the same. Nothing changes. The cash book is the same. The cash book can never change. The only thing we are going to put is debit and what? And credit. And the rules of double entry are going to govern it. And it is the same way. Nothing is going to change. Good enough, it is not an exercise. It is an example that we are going to do together, isn't it so? So we are going to see how it is done, but certainly it is going to be the same what? The same thing, the same treatment. Guys, these are numbers that can come and you can do them comfortably. And you get all 20 marks. Imagine such a number. Question, the part A, 1 mark. Just someone wants you to explain what an accrual is and what accrual concept is and what substance over form is. Those are 2 marks. And then you come, just draw these ledgers and you have 18 marks. Sorry? Your code, yeah, time is a very big factor. But we should know how to play with it. Should know how to play with it. We should know. And one way of knowing how to play with time is you should know numbers. And this comes from how many you have done before the exam. You should know numbers that can be executed fast. Are we together? A number that you can do within 15 minutes and it is done. Numbers like suspense. Numbers like these ledgers. These ones, this ledger, you don't need 38 minutes for it. Do you? You don't. You don't need 38 minutes for a ledger and a trial balance. And trust me, that is it. You need it if you're going to draw one ledger at a time. But if you're going to read a transaction, draw their ledgers, pass the double entry, move to another transaction, draw the ledgers, pass the double entry. There's nothing hard in it. There are numbers that you can do within 20 minutes. At most, 20 minutes. And if you do a number in 20 minutes, it means that you have left 15, 18 minutes for another what? For another number. Objectives. Do them in 20 minutes. They need calculations. Of course, they must need calculations. Pick out, first do a round of those ones without calculations. Finish them. Go back to those ones that have calculations and then you compute and finish. Yeah, that is it. We have to find mechanisms. All right, I think let's start. Transaction number one, these are in the books of Cafero and Sons Wholesale Traders. Cafero and Sons, there is no specific title for a ledger. Are we together? Like Cafero and Sons General Ledger, there is no specific title for that. Are we together? So whether or not you just dive into the ledger and you start drawing the T accounts, no problem. For as long as you indicate the number that you're doing. Now, this is number what? This is number 5. But for financial statements, there is a title. And the standard specifically explains what the title should look like. Are we together? Okay. Transaction number 1. We are in the books of Cafero and Sons. And this is the month of January 2022. We have been given a range of transactions. And our work is for each transaction, ascertain which account is going to come from that transaction, draw that account, pass the double entry, move forward. Is it okay? So we move on. Transaction number 1. Started business with 54 million cash in the bank, 2.4 cash at hand, full stop. He also surrendered his personal refrigerator worth shillings 800,000 to the business on the same date. Yeah? On the same what? On the same date. Now, I'm not going to do this number as though we are professionals. But when you're doing it in the exam, you have to be professional. Me, the way I'm going to do is, after reading, I'm going to first write our double entry very well. Are we together? I'm going to write our double entry in terms of entries, okay? Afterwards, then we shall draw our what? We shall draw our accounts, our ledger accounts. I think that is okay, but it is not required in the exam. In the exam, all they want is what? Draw a ledger, pass the double entry. You don't need to show which double entry you're actually passing. Is it okay? Yes. And now the problem is that if we are to do it the way we're going to do it in a paper, okay, it is okay. In my workbook, that is how I'm going to do it. But let me come up with maybe, let me get maybe a Google spreadsheet and I just do my workings there for purposes, for my people who want to do it. Because I know there are people that want to know more about double entry, isn't it? Not seeing it. So I'm going to have two sets. I'm going to use this Jamboard for purposes of our workings. It won't be as effective as my Microsoft whiteboard. But regardless, we shall move, no problem. Or I may choose to actually do what? Okay. Okay. So we are starting. Transaction number one, we are starting business with cash and then bank. If you have cash bank, then you draw a cash book at once. So let our first ledger be a cash book. Are we together?
Excuse me.
Yes, please.
I think we are supposed to draw a three column because I'm seeing a discount somewhere. Discount allowed on date 8th.
Okay, it is okay. We can put. Okay, let's include it. No problem. Since we are going to do ledgers of discounts, even if you don't put it, but it is okay. Discount allowed. And then we shall have a discount received. Okay. I think that is okay. All right. So we are starting business with 54 million cash and 2.4, no, 54 at bank and 2.4 at what? At hand. Now there's a full stop there. We are starting business with 54 at bank, 2.4 at hand. What do we pick from that information? We are having resources that we are using to start the business. I can also add the other one because all of them, they are pointing towards the same what? The same thing. Because he's also surrendering his what? His personal refrigerator worth 800,000 to start the business. So these are all resources that we use to start the business. And we say that all resources that you use to start a business, they form what? They form capital. To start with, we are saying resources, meaning those are all assets, isn't it so? And then we are having capital. So being assets, then what are we going to do? So we are going to pass a debit. Okay. We're going to pass a debit of what? We are passing a debit of what? Of cash, because cash is an asset, not so? And that is 2.4 million, isn't it? And then, Sure. Cash is 2.4. The money at the bank is what? Is 54. So we are having cash. Cash is a resource, isn't it so? And we are recognizing it. That's why we are debiting from our general principles. Assets are resources, debit. And then which other asset do we have from that transaction? Bank. So meaning also bank, we are going to do what? We are going to debit it. We are going to debit bank. With how much? With 54 million. And then, sorry, we have another asset, not so? We are having another asset, and that asset is a refrigerator. You can say fridge if you don't know how to spell it. How much? This is 0 point. And then all these resources, they are assets. They are going to form what? Capital. Capital is a claim, isn't it so? And claims increase by what? By crediting, isn't it? Yeah, that is equity. So meaning we are going to credit capital with how much? Everything that we use to start a business forms what? It forms capital. So how much is their worth? So meaning we are having capital of 57.2 million. Sorry? So at the start, we are having capital of 57 point what? 0.2 million. And that capital 57.2 is in form of, the capital is in form of cash, bank, and a what? And a fridge. That's how we started. Okay. So meaning from this transaction, we need a bank account, we need a cash account, we need a refrigerator account, and then we need a capital account. Okay. But for cash and bank, we already have a cash book. Are we together? So we are going to pass a debit at once because we have our cash book here. Mine is here. So we shall have a debit this side and a what? And a credit. My figures are in what? Are they? Okay, they are a bit bigger. So me, I'm going to precise all my figures to thousands. So my cash book is going to be in thousands. Okay, so what is our date? This is 1st of January. 1st of January, I'm going to debit. I'm debiting my asset, I'm debiting my cash, and I'm debiting my bank. Are we together? So on the debit side, cash is going to receive something and bank is going to what? To receive, isn't it so? How much is cash receiving? It is 2.4. And then bank, bank is 54. Yeah, I want to first of all complete all my debits. Okay, all my debits. First of all, disallow the details. So I want to draw another account that we are calling a refrigerator account. Am I dying? Let me say fridge. So my fridge account. So these are one of the accounts that you may not need to make too long, because you're not in a business of buying fridges, isn't it? You're not in a business of buying fridges. You buy it once. So you don't expect it to be a very big account. Make it so short. If you can't even give it like 3 lines. Are we together? Because unless you're saying that you're going to buy another fridge but these non-current assets, you buy it once, use it, and more so for these monthly transactions. So we are having a debit and a what? And a credit. My figures are in shillings, thousands. So on the same date, which is 1st of January, I'm also going to debit my fridge. And by debiting, we mean write that figure on the left-hand side of that account. So how much is the fridge? Okay, it is 800. I'm precising, I'm knocking off some zeros. That is where we are, okay? But now, this ledger is not complete. The details section has to have something, isn't it so? So we are passing all these debits, but they are relating to what? Now that is the corresponding nature of double entry. Are we together? As you're passing the debit entries, you may need to use the wording on the what? On the credit. Are we together? And as you're passing the credit entries, you may need to use the wording or wordings on the what? On the debit side. Are we together? So meaning, I will have my capital account here. And also in my cash book, I'm going to have what? Capital account. Are we okay? Yeah? This simply means that my cash and bank increased because of capital, so due to capital, and the same with my fridge. Okay? Should we move? Okay. So after the fridge account, I need to also draw the capital account. I haven't drawn it. Capital is also not going to be, you're not going to keep adding capital every now and then, but you have to take caution. Capital is in how many forms? Because as you're filling in your capital account, you're going to use the wordings on the what? On the debit. Are we together? So you're going to bring capital in all its forms. Are we together? So the length of that account will depend on how many forms capital has been. Okay, so we are filling in. In this double entry here that we have drawn, so far we have passed this one. We have passed this one and that one, isn't it so? The one that we have not yet passed is capital, and that's what we are going to pass. But remember, as you are filling in your capital account, you have to use the references on the debit entry. Are we together? So meaning you're going to bring cash, bank, and then what? And a refrigerator. Are we together? Don't just say 57.2. If you come here and you say 57.2 or 57,200, then you're going to ask yourself which word to use there, because this 57 relates to very many what? Relates to very many elements. Are we together? And you're not allowed to use commas. Capital account, comma. Sorry, cash account, comma. Bank account, comma. Refrigerator account, comma. You're not allowed. So show them independently. So meaning on 1st of Jan, we are having cash account, and that is 2,400, not so? Then on the same date, we are having the bank what? Account. That was 54. And then on the same date, we are having the fridge. I think that is it, not so? Have we understood up to this point? That is how we post those entries into the ledgers. That's how we post them. So trust me, if you're to do this, if you have practiced enough, this doesn't take you this much time like we have taken. Isn't it so? You do it in about a few seconds and that you have passed it. You go to another transaction. So what is our other transaction? So the other transaction is that paid rent equivalent to 4 months, shillings 3 point what? Shillings 3.2 by check. The rent agreement with the landlord requires rent to be paid at the start of the what? At the start of the month. Now, we are paying rent, but surely, I think you see that we are paying it in what? We are paying it in advance, isn't it? We are paying it in advance. We are in the month of January, we paid for 4 months. Just like it is how landlords do. They want you to pay up front, isn't it? Okay. Now, most of this part we are going to look at it after end year adjustments, but just a little, if we are to have a little, let's take a little glimpse on how this works. Now, in the month of January, the expense that you have incurred in the month of January called rent cannot be 3.2. Is it? Can we say that in the month of January, we have incurred rent of 3.2? We can't say that simply because the 3.2 relates to how many months? It relates to 4 months. So meaning what we call rent, the actual rent for the month of January, because we are in the month of January, the actual rent is actually 800, not so? Because if you get 3.2 divided by 4, you get 800 per month. So meaning January only had 800 as the rent. Are we together? So meaning our expense that we call rent is 800. The rest of the money cannot be an expense. And that is simply because of the matching concept. Are we together? Matching. The other remaining amount, which is how much? 2 point what? 2.4. The remaining 2.4 will be an expense that will be incurred in the subsequent months. Are we together? But you have just paid it in what? You have paid it in advance. So meaning that money that you have paid in advance is your economic resource. Isn't it so? It is your economic what? Resource. So that prepaid rent becomes your asset. It is an asset. You paid it up front. So it's like you're expecting someone to fulfill their obligation unto you, okay? But for you, played your part. That is some sort of a receivable, okay? Okay, so that prepaid expense is an asset. So in this transaction, it was a bit hidden, but it's like we are having about like 3 elements in there. Not so. The first element is the expense that you're actually paying for the month of January, which is 800. And then the second item or element is what you paid in what? In advance, that relates to the other 3 months. Are we together? And that is the prepaid what? prepaid rent, and that is an asset. Are we together? That is it's an asset, because when you pay an expense in advance, that is an asset. You have a resource. Are we together? When you have a house and you pay the landlord 3 months up front, isn't it? If that landlord has to chase you, he has to chase you after refunding, and that is if you have agreed. Otherwise, I can say, Sijivam, I'm not leaving because I paid. Are we together? So isn't that a resource? You control, isn't it so? So I control, if I paid you 3 months in advance, I control it. I control that house if I have paid you. So you have to beg me properly for me to do what? To leave. Isn't it so? Yeah. So that is an economic resource. And then we are losing some money because we are paying using what? Losing money. So can we integrate that into double entry terms? Can we integrate it into double entry terms? What are we going to debit? We are going to debit the rent account simply because rent is an expense with 800.
Debit receivables.
And then we are going to debit our prepaid what?
Rent.
Prepaid rent account with how much?
With 2.4.
4. And then what are we going to credit?
We credit bank.
We used money in the bank. So our asset is reducing. So we credit bank with how much?
3.2.
3.2 million. Are we all okay? Yeah. That is it. That is it. Okay. So which accounts do we need here? We need rent and then the prepaid what? Prepaid rent. We don't need bank because we have it already. Not so? So let's draw the rent account and the prepaid rent account. And this is an account that should be short. Not so? Because you're not going to pay it. You're not going to pay rent again in this month. So you can make it very short. 2 lines, 3 lines, it is okay.
A question, please.
Yes, please.
Is it okay if I put all that, like that, if I put prepaid rent under receivables account?
Under receivables. No. In aggregation, you're allowed to aggregate when you're presenting on your financial statements, but that is financial reporting. In the ledgers, please put it separate, okay? But when you're presenting on the face of your financial statements, you can aggregate trade and other receivables, okay? The trade receivables and then these other receivables like the prepaid rent and whatever, aggregate it at once, put it on the face of the financial statements. But in the ledgers, try to separate them. If it is prepaid rent, call it prepaid rent, okay? It is better that way. It is better that way. Okay. Okay. So we are coming up with the rent account and we are also coming up with prepaid. So can we pass the debits? When was this done? On 1st. So which wordings are we going to use on these debits? We are going to use bank, okay? Yeah, the other credit entry. This credit entry here is what we are going to use, bank. Then we haven't passed cash. Sorry, it is bank. We haven't passed bank. So we are going to take it on which side of bank? The credit side of bank. Yeah. But as we are taking it there, we are going to split also because they are two debits.
Class.
There are two debits, so we have to split it a bit. Pastor Monday, kindly mute. Pastor Monday. Pastor Monday Rogers. So let's go to our cash book. On 1st of January, we are going to credit it first of all with the rent what? Account, not so? And then prepaid what? Prepaid rent. And I'm putting it under the bank what? Under the bank column, isn't it? Yes, please. Where? Do we really need to separate them in the cash book? We are following the rules of double entry. We are looking at our cash book as a ledger. Okay? So when you are crediting the debits, it is the debits that are giving you what you're actually supposed to do. The same thing we did in capital, isn't it so? When we are passing a credit entry for capital, the debit guided us, isn't it so? It's both a journal and a ledger. Now, most of what happens in the cash book, and I think Grace Reste, please mute. Now, what people normally do, the bookkeepers in the cash book, when they pay rent of how much was it? 3.2. They just credit the cash book with 3.2. And that's the reason as to why after ledgers, we are going to look at end year what? End year adjustments. Are we together? So they pass one entry in ledger and it goes directly to rent. Okay? But at the end of the period, not all that rent was actually relating to the same period. So you need to adjust it a bit. Are we together? But now that we are in ledgers and we know what we are doing, we don't have to wait. Is it okay? Separate it at once and we move. I think it will make more sense in our next class. But are we okay so far where we are? The online team.
Yes.
Yes, sir, but I have a question.
Ask it.
Are we not supposed to enter this amount for fridge in the cash book?
The amount for the fridge in the cash book? No.
That fridge.
As a what? As a what? As a receipt or as a payment? Because we didn't receive money, nor did we pay. The owner just surrendered the fridge. Are we together? But because of the money measurement concept, the fridge must have a monetary value attached to it. Are we together? And that's how it came to be an asset here. We didn't buy it.
We just open up an account.
Yeah, you recognize the fridge account, and then that will be capital. If we had bought it, the credit was going to be cash or bank, not so? But since we didn't buy, it
Okay,
was
sir. Thank you.
the owner's asset surrendered, it increases capital. All right. So the other transaction is we are purchasing furniture and fittings. 4 point what? 4.6 by check. 4.6 by check. Yes. What do? Okay, so we are going to debit furniture and fittings. We are debiting it because we have purchased an asset, not so? We said when you purchase an asset, that is not purchases. Are we together? That is partly the question that we are asking, the difference between capital expenditure and revenue what? Expenditure. When you purchase a non-current asset, that is a capital expenditure. Are we together? So you cannot treat it as revenue in nature and you call it purchases. Are we together? So we debit furniture and fittings of how much? Of 4.6 million. And then you credit our bank because money there is reducing. So we have a bank account, but what we don't have is the furniture and fittings account. So we just go ahead and withdraw the furniture and fittings account.
A question.
Yes, please.
We report these assets in one day, all expenses in one day, and liabilities in one day.
Why don't we record all these assets in one ledger? By assets, you mean non-current and current, and you put them in one ledger. Now that stems from presentation, yeah? It stems from presentation because when you're presenting, you're going to need to have these items presented separately. If you're going to present them separately and you joined them in the ledgers, then it means you won't have their respective amounts attached to them. Because IS1 dictated on how you should present. Are we together? And it told you that when you go to your statement of financial position or balance sheet, this is what we expect of you. Okay? You'll have your non-current assets. Okay? You'll have your current assets in form of cash, bank, receivables, and whatever. Are we together? Line items. So if in your ledgers you aggregated everything, as you're balancing off, you'll have only one balance, not so. Then that will take you to aggregation and offsetting, which is not allowed. And I think we looked at it in our conceptual framework. Aggregation and offsetting. If you're to aggregate, aggregation is okay, like these other receivables and trade receivables, trade and other receivables, because other receivables are immaterial. Are we together? So you can aggregate them to the trade receivables, but you cannot get material items of assets and you aggregate them together. Are we together? Or material items of expenses and you aggregate them together. Or material items of incomes and you aggregate them together. That is specifically mentioned in that standard. And it is that standard that governs us, that dictates how we should present our information on the financial statement. Now, if you don't want to aggregate them on the financial statements, then don't aggregate them in the ledgers. Because when you aggregate them in the ledgers, you will have one balance, one figure for all of them. And you'll have no option but to take one figure as in your financial statements, which is wrong. Okay? So that's why we break them down. Each material item, give it its own ledger. So furniture and fittings, we are debiting it with this is on on second. That is 4.6. So we are using money in the bank. So we are going to have our bank account here, isn't it? And then we go to our cash book. Second of Jan, we have furniture and what? Furniture and fittings. $4.6. Are we okay? Please, where you don't understand, you ask. Yes?
I don't see where you have mentioned that you will find that.
On second, purchased. On second, the date is there. Yeah. The date has been given on the start. Then number 4, oh, sorry, not number 4, but on 4th. Yeah? Yes. On 4th, withdrew shillings 25 million from the business bank account and put it in the business cash box. Yes. Full stop. Then purchased inventory of 24 million by cash. Okay, so we are withdrawing. When you withdraw, what do we do?
We debit cash, then we credit bank.
So we are going to debit cash.
And we debit bank. And we credit bank.
I think this is okay. Is this okay for everyone? You're withdrawing money from the bank. It is coming into cash form. So cash is increasing, bank is reducing. So that entry is going to be started and completed in the same ledger, in the cash book, not so? That is on 4th. So on 4th, we are going to debit. Sure. We are debiting cash. Yeah? Okay, in the details. In the details, we're going to have bank account. Yeah, you're right. We don't say we're going to debit bank. We are going to debit cash with bank. Okay? All right. And on the same date, we are crediting. We are crediting bank. Okay. I think that is okay. Sorry? You have a question? Sorry? Yeah, this is a contra. It is a contra entry. To indicate. Oh, the C, eh? No, it is okay. You can indicate, no problem. No, it is not. It's really not a must. It's not a must. But you can put, if you so wish. But you see, when you're to be organized, you need to come up with like a separate column, and that makes the entire thing very, very huge. Eh? So we're purchasing inventory of 24 million by cash. Purchasing inventory. Now, these two purchases are different. The first one, we purchased furniture and fittings. And now here we are purchasing inventory. Are we together? So when you purchase inventory, the treatment of that in the ledgers is different from when you purchase furniture, because furniture and fittings, it is a non-current asset. Are we together? You're not in a business of doing that. Now, what you do, you recognize that very item. Are we together? You recognize that very item. And for purchases of inventory, you're not going to debit inventory. We are going to debit purchases. That is the revenue expenditure. But the other one is a capital expenditure. It's capital in nature. That discussion is going to come after. Yeah? Sorry? That's why you are asking, but we shall see it later. Is it okay, guys? We are not debiting inventory. And the reason that's why we are not debiting inventory, I explained it sometime back, because at that point in time, you are not sure whether that is going to be your final asset. Isn't it so? The inventory that is an asset is closing. Are we together? Closing inventory is an asset. Are we together? Yes. And that comes after you have sold off whatever you have sold, and then you know what has remained, which is going to be your asset. But as we are recognizing in our ledgers, we recognize an expense, which is purchases. So meaning we are going to debit purchases, and we'll credit cash. And that is 20. $24 million. Are we okay? Okay. So which account are we coming up with? Yeah, come up with the purchases account. So on 4th of January, that is 24,000. But we are using the what? Yeah, cash account. Then we go to cash, we credit cash with 24. Then we're using the what per? Purchases. Okay. I think we can have our break. Or we move on.
We move on.
No, let's have a break, because this number is not going to end. It's not going to end. Okay, I mean, it's not going to end now. Eh? Yeah, it's not going to end now. So let's have our break. We come back at 7:50 as we are comprehending what we have so far done. Okay? So we meet at 7:50. We shall start with the transaction on the 6th. On the 6th of January. I think we can resume with transaction on the 6th. So on 6th, there was a purchase of additional inventory from Haji and Sons Limited of shillings 8.4 million. So we purchased additional inventory from Haji and Sons, shillings 8.4 million, on terms that the business would receive a cash discount of 4%. Payment was made within 10 days. So meaning this was a credit transaction, isn't it? No cash was exchanged. And hence what the double entry, what is the double entry? We debit, we are debiting purchases. Yeah, we are debiting that expense, the purchase cost. It is a cost to sell, cost of sale. So we are debiting purchases of what? Of 8.4 million, and we are crediting, trade payables, Haji and Sons, 8.4 million. Trade payables, since we are in the general ledger, then we shall have one general payables account, not so? Payables. Okay, so do we have purchases? We have a purchases account already. So what we need is the trade payables account. So let's draw the trade payables account. So we are debiting 8.4. This is 8.4 on 6th of Jan. And then this is going to be our trade payables. Haj. Even if someone uses Haj and Sons, it is okay. Are we together? Trade payables, Haj and Sons, it is okay. And then we are crediting our trade payables with the same amount to complete double entry. And then we are using the word, we are saying purchases account. Yeah? Are we okay? It is just completing double entry. Make sure that you don't leave a transaction without double entry being completed. Because if you pass only one entry, then that is what causes the trial balance not to balance, and hence causes you to have a suspense account. Okay? So you must make sure that double entry is complete. And as you're completing double entry, you must make sure that the total on the debit equals to a total on the credit. If they are different, still your trial balance will not balance, hence suspense. Are we together? So far, before we even look at suspense, we have two errors. Isn't it so? So what happened on 8th?
Excuse me, sir.
Yes, please.
I have a question.
Yes, Monday.
We are saying that at what point in time are we going to recognize the discount of 4?
At what point in time are we going to recognize the discount of
Of
4%? There is a very big if here. If payment is made within 10 days, so it is subject to that payment. So the minute he makes that payment, we shall give him the discount if the payment is made within those 10 days. Meaning if he makes a payment after 10 days, no discount. Right now, we cannot recognize a discount. Because if we recognize that discount, however much you know that you're going to pay, you think that you're going to pay within 10 days, you cannot recognize that income now, because that will be going against the prudence concept. Are we together? You may be overstating your incomes, and when you overstate incomes, then meaning assets are also going to be
overstated.
Together.
Okay, thank you.
You're welcome. Okay. So sold inventory to Maseruka Retail Enterprises for shillings 4.5 million on terms that Maseruka Retail would be allowed a discount of 3% if payment is made within 2 weeks. Still, this is it is evidence of a credit transaction. Not so? It is a credit transaction, no cash actually exchanged hands. So what is the double entry there? We are selling, making sales to Maseruka on credit. We debit. So we are debiting our trade receivables. So someone says debit Maseruka. Okay. That is 4.5. And then what are we crediting? Sales. That is an income. You make a sale, you have made an income. Are we together? So that income is called sales. And we all know that incomes increase by crediting. So we recognize them by crediting them. So we have trade receivables account, but we don't have a sales account. So we can draw a sales account. Sorry? We don't have both of them, even trade receivables, okay? So let's draw both of them. Trade receivables and, oh, I was remembering trade payables. Trade receivables. So we are debiting trade receivables. On the left-hand side of that ledger, that's where the debit is. So on 8th, we are debiting the trade receivables with 4.5. This is sales. And then in the sales ledger, we are crediting the sales ledger on the same day. This is Maseruka, this is Maseruka also, or trade receivables. Whichever you use is okay. All right. I think we talked about doing this number whilst also doing subsidiary ledgers, but we forgot it. Forgot all about it. Okay, let me talk about it here briefly. Now, if you make such a transaction like a sale and you're supposed to draw subsidiary ledgers, then it means you have to also come up with Maseruka. In addition to what we have so far done, you're going to come up with Maseruka's account individually. Are we together? You also debit it. Are we together? You also do what? Debit it. Okay? That won't be double debiting. These are completely two sets of ledgers, and they are performing two purposes. Are we together? So you're passing the debit to the debit how many times? So if this is where we have our subsidiary ledgers, for example, that's where we have our subsidiary ledgers and the data subsidiary ledgers. So we shall come up with Maseruka. Is it Maseruka and Sons? Is it?
Just Maseruka.
It's just Maseruka. So we come up with Maseruka's account just like that, okay? And then what we do is we are debiting it on the same what? On the same date. And this is sales of 4.5. These accounts here, the subsidiary ledgers, they will help us as at any point in time where we need to verify the general ledger. Are we together? So meaning the balances in these accounts will be used to verify the balances on the general what? On the general ledger. Are we together? That's why we are also doing exactly what we did in the trade receivables. Are we together? But in this particular case, this ledger is to Maseruka only. Are we together? Receivable will remain there. Everything that we have done doesn't change, okay? You just add this ledger here. It is subsidiary.
And maybe also add one for Haji.
Sorry?
Maybe we can also have one for Haji.
We do what?
I think I can also have one for Haji as under 20
Haji
payables.
Haji was who? Haji was a trade payable. So you can come up with a payables subsidiary ledger. Okay? This is a subsidiary ledger, guys. I don't want you to take it as though we are having double debits. Yes, please.
Excuse me, sir.
Yes, please.
In the first time you said
I'm coming. Yes.
For the subsidiary ledgers, that I can even put Maseruka instead of trade receivables. So aren't we doing the same thing?
Okay. Thank you for that question. Ideally, we are doing the same what? We are doing the same thing, but intending different purposes. Are we together? We are doing the same thing. We are passing a debit that we already passed. Are we together? In the general ledger. But we are doing this in a specific individual person's account. And that is what we call a subsidiary ledger. That a subsidiary ledger is specific to an individual. Are we together? To a person, that's a subsidiary ledger. Are we together? Yet a general ledger, if it is a receivables ledger, if we sell on credit to Maseruka, we shall debit the trade receivables ledger. Are we together? If we sell on credit to Tom, we shall debit the trade receivables ledger. Are we together? Yet the receivables ledger, if we sell to Maseruka, Maseruka will have his ledger. Tom will have his what? His ledger. Are we together? If Tom brings back certain goods, we shall credit Tom's ledger. Are we together? So that in the end, we shall have a balance on Tom's account, and we shall have also a balance on Maseruka's account, and we shall also have a balance in the general ledger's account. And those two, the balance in the general ledger must be equal to the balance of Tom and Maseruka combined. Are we together? If the two are not the same, then it means that we can investigate further.
Excuse me, sir.
Yes.
Just I think that these these subsidiary ledgers are just helping us to unpack, to know, for instance, if you have our receivables,
Yes.
who are these individual persons that we are supposed to get our money from? So we just get our trade payables as a whole, and we begin to unpack each of those to know what constituted the payables in case there are many.
Exactly. Pastor has put it out very right. Pastor Mande Rogers. Pastor, people are saying thank you.
You're welcome.
So that is exactly what Pastor said. These subsidiary ledgers are helping us. At any point in time, when you're preparing your financial statements, you're going to put one block figure. These are my trade receivables, 100 million. But they relate to who and who. Are we together? That out of the 100 million, 20 million is for Maseruka. Are we together? But how will you know that? It is if you also prepare a separate ledger for Maseruka. Are we together? Because Maseruka will have, we are looking at it, look at it in a broader sense, where you have Maseruka is your perpetual customer. Are we together? Perpetual. He buys on credit, pays you, sometimes he brings back certain goods, you give him a discount, you do what? Are we together? It becomes so hard for you to ascertain at a certain period how much you actually demand him as an individual. You can easily know that if you have a subsidiary ledger for who? For Maseruka, so that you know that for Maseruka, I'm demanding him this much. For Haji, I'm demanding him this much. Are we together? But in total, my total receivables are this much. Are we together? So that is the purpose of subsidiary ledgers. So should we go ahead? Okay. Oh, someone said we didn't pass Haji, but was Haji a debtor? Haji was a creditor. So we can also pass that that ledger. It is a subsidiary ledger. But this subsidiary ledger is a creditor's subsidiary ledger. It's not debtors. Eh? So under creditors subledgers, we have Maseruka. Oh, sorry. Haji. It's just Haji or Haji and Sons. You know Haji like Sons. Haji and Sons. It's very hard to find Haji alone. Haji and Sons. Okay. So we are crediting. because this was a payable. Okay. So how much was it? We are trying to run back in time. Actually, it was the immediately up. That is 8.4. And that was done on 6th. On 6th of February. Okay. And then sorry?
Yeah.
I'm in Feb already. I'm so current. So 6th of January, and then purchases, not so? Ideally, what you do in your general ledger, in your trade payables ledger, the same thing, do it here, but the heading should be different. Are we together? The heading should be different. Call it that person's, that individual name. Yeah. No, it is not requested. In this question, it is not requested. Yeah, not at all. Because the question was specific, it said general ledger. And you can only do this if at least the examiner tells you that you also include subsidiary ledgers. But if they don't, just draw a general ledger and move on. Are we okay? And for purposes of populating your trial balance, don't look at the subsidiary what? Ledgers. Because subsidiary ledgers are so administrative. Are we together? They are so administrative. And our accounting and purposes of preparing our financial statements, look at our general what? Our general ledger.
Excuse me, sir.
Yes, please.
Well, the question said we are supposed to draw a general ledger.
Yes.
But when we look at the format of the general ledger, it has the details, debit and cash.
It has
So,
what?
it has the general journal.
Mm.
It has details, debit and cash.
And cash.
The
Okay.
general journal, is it different from the general ledger?
Yeah, a general journal is different from a general ledger. Yeah?
Oh, okay.
A general journal is different from a general ledger. A
Okay.
general ledger is a combination of different accounts. The way we are drawing them there, those accounts combined together, they form what we call a general journal. Are we together? A general journal. Yet a general ledger is a book of original entry.
Mm. Okay. Thank
Are we together?
you. Yes.
Sorry? Yeah?
I'm saying,
Eh.
even a general journal, it's a book of
Yeah, a general journal is a book of original entry, but a general ledger is not a book of original entry. Yes, please. Yes, it's okay. Mm.
If I is my supplier,
Yes.
and those my customers,
Mm.
they are supplying me with credit.
Mm.
I've also done some marketing,
Mm. Mm.
very much for those transactions under one subsidiary.
Mm. You'll have Haji as a debtor subsidiary account and Haji as a creditor subsidiary account. Otherwise, if we do that, then it will take us to offsetting still. Are we together? It will take us to offsetting. That in the end, your asset will be offset from the liability. But there is some minor bit of offsetting that is allowed, and you can do it in trade receivables and payables as well. But I don't want to go to that discussion at this level. Yes.
Even in the accounting software, does it?
It can merge them depending. You see, when we look at offsetting that is disallowed is offsetting of material items. Are we together? So meaning at a certain point in time, you can even merge those two accounts, but it is not a true and fair representation of the affairs the way they are. Yeah, that's why IS1 specifically calls for you not to offset. Yeah, where possible, don't offset. Are we together? Don't offset incomes from expenses. Don't offset assets from what? From liabilities, if material. But there are immaterial bits that can be offset. But let's leave that discussion for financial reporting. Maybe we shall dive deeper in that area. Okay?
Excuse me, sir.
Yes, please.
You mentioned something to do with return inwards on Maseruka. You said in case Maseruka returned some goods, we were going to credit him and debit returning inwards. So if I'd already recorded in the general ledger, how do I effect that in the general ledger? How do I effect that change?
You already recorded it where?
In the general ledger.
Okay, when he returns, we shall debit returns inwards and credit Maseruka, not so? Or trade receivables. Meaning, come up with the return in inwards account, come up with it, debit it. Isn't it so? Then go to your trade receivables and credit trade receivables, not so? But as you're crediting trade receivables in the general ledger, also credit Maseruka in the subsidiary ledger. Are we together? What you do this side, you have to also do it the other side. Because in the end, you're going to compare these two things. They must be communicating. They must read the same.
Okay, thank you.
You're welcome. Okay, I hope I answered your question about trade payables, trade receivables. You know, people do very many different things happen in practice. Okay, and what we are doing here is so much a manual. Are we together? But you know, things we have gone, we have modernized a lot of stuff. Okay. But you see, for you to effectively perform in a modern environment, you need to have understood the manual environment better. Isn't it so? It is a step forward towards you actually doing the computerized bit of accounting much more better. Okay. I don't know where we stopped. Did we pass these entries? Since when did I get dates to admit?
You're supposed to go to the next date.
Let me admit. Okay. So which that is on 9th, not so? We finished 8th, not so? And I think we completed the double entry. Sales and then trade receivables, yeah. So we go to 9. 9, made cash sales worth made cash sales worth 3.56. So what is the double entry there? We are going to engage some bit of speed because of time.
We credit sales and we debit cash.
So we are going to debit cash because we are getting cash from the cash sale and we are crediting the sales. Okay. So that is 3.56. So we have both accounts, right? So let's just debit cash in the cash book and credit sales 3,560. So on 9, is it 9? Yeah. On 9th Jan, we are having 3,560, and this is cash, not so? Cash. And then in our cash book, we are going to debit the cash book. Yes? Yes, please. 560. Yes. There was a question? No question. Are we all okay up to that point? Okay. All right. Then 11th, settled the amount owed to Haji and Sons Limited in full. Maseruka Retail Enterprises also settled their obligation in full. All transactions were through the bank. Let's handle it piece by piece. First of all, we are paying Haji and Sons off. We are paying Haji and Sons off. But remember, part of the terms of the contract were that if we pay within 10 days, we get a 4% discount, isn't it? Have we paid within 10 days? Yeah, so we are going to receive a discount. We are going to receive a discount. Remember, Haji was demanding us 8 point what? Haji was demanding us 8.4. The liability was 8 point what? 0.4 million. And this is the money that we are supposed to pay, isn't it? So now that we are going to get a discount, how much is our discount? And which type of discount is this? This is the discount received. Yes?
Discount received.
It is 360.
336.
36. Okay. So we are receiving a discount of 0.336 million. Not so? If we are to less it from that, what exactly are we going to pay? Were they paid
You're
by
paying 864.
80. 8064.
so 8.064? That is what we are actually parting with in terms of what? In terms of cash, isn't it? Okay. So what are our double entries in this particular case? Sorry? We are crediting bank because we are losing money in the bank. So we are going to credit bank. How much? 8.064 million, because that is the actual money that we are parting with, isn't it? And then we debit what? We debit discount received. Why are we debiting discount received? It is like income, and income increases by debiting. Eh?
We credit discount received.
We are crediting discount received because discount received is income, and income increases by crediting, not so?
Yes.
So that is 0.336 million, not so? And then what are we debiting? We are writing off the liability. We had a liability of 8.4. We have to de-recognize it, not so? So a liability is reducing. That is the trade payable of 8.4 million. Now, these double entries can mean to be a bit tricky when you have discounts and when you have returns. They can mean to be tricky. But always, whenever you have a discount, ask yourself, how much am I paying? The actual amount that you're paying. Credit your cash or bank with that amount, okay? Then, how much was the actual liability before the discount? You have to write it off. Are we together? The liability is increased by crediting, writing off, debit, the entire amount. You will find out that those double entries are not matching. So the side that is not matching is the discount. Isn't it so? Because incomes from the conceptual framework arises as a result of an increase in what? in assets, not so? Or a reduction in what? Oba tubireke ebyo tuleme kuddayo eyo. Let us not go back to in that. Because I'm saying people are not responding. Incomes arise as a result of an increase in assets or a reduction in liabilities that leads to an overall increase in owner's equity other than contributions from the shareholders or owners. Now, in this particular case, this income that we are calling discount received has come as a result of a reduction in a liability. Are we together? The liability was 8.4, but we have ended up paying 8.0 to clear it off. Are we together? Where we were supposed to pay 8.4, we have ended up paying 8.0. Are we together? Meaning the overall liabilities have reduced, and that decrease there that we have actually not paid off, yet we have done away with it, is an income. Yeah, a bit technical. You know, when these guys are coming up with these words, they oversee it, they think, they do what? So we expect things to be a bit technical there. But if you're to think about them, they make sense. They do make what? For example, rent. If you pay rent, what is an expense according to the conceptual framework? The expense arises as a result of a decrease in assets or an increase in what? In the liabilities that results into an overall decrease in what? In equity. Other than distributions to the owners of funds, not so? And when you pay rent, how does it become an expense? You had cash. If you pay rent by cash of 500,000, you had cash of 500 and it has disappeared. So if it disappears, your assets are reducing. And what makes them reduce? The expense. Yes.
So let's put the basic computation. Rather than that last part.
Yeah, they have to make sure that that equation is complete, because if you just leave it like that it is a reduction in asset or an increase in liabilities that causes an overall decrease in equity, and you leave it there, then you may kwekuba engwala, you may kwetega, because what reduces equity is not only expenses. Okay? Shareholders can get something from there, like a drawing. Are we together? And it reduces equity. So should we say drawing is an expense? No. Are we together? They may pay themselves dividends, reduces equity, but are dividends expenses? No. You get. So they have to make it a bit broader in perspective. Okay, guys, we are running out of time. What don't we have here? Discount received, not so? So we come up with a discount received account.
But we had put it at the other side of the cash book.
Sorry?
I think we had it in the cash book.
Guys. The discount received in a cash book is not a ledger of discount received. Looking at the cash book is a cash ledger. Are we together? It's a cash ledger and a bank ledger, not discount received. The discount received and allowed that we're seeing in the cash book, they show cause, they show effect. Are we together? That we are going to receive less cash simply because of the what? The discount, but that is not a ledger. Are we together? You have to come up with a discount allowed ledger and come up with a discount received ledger. Are we together? These ones that you're seeing here, they are not a ledger. Are we together?
Yes.
Please understand that. Okay? Yeah, putting them there, it is just to show effect that we received less money because of a discount. That's why even if you don't put it, it is okay. Unless the question is asking for a 3-column what? Cash book. But if you're in ledgers like this, you don't have to even put that column if you don't wish. Are we together? Okay, let's move. So we are coming up with a discount received ledger. Okay, so let's pass those entries. Number one, what are we debiting? We are debiting trade payables, not so? So let's look for our trade payables. Yeah, we have the trade payables around there. On which day? On 11th. On 11th of Jan. So we are writing off the entire 8 point what? Are we together? Isn't it? Oh, we are using the words on the credit, not so? So the 8.4 is in relation to 2 credits, not so? So meaning, as we are bringing it here, we don't bring the entire amount, but we bring the 2 credits. That is discount received and then what? And then bank. So we are having discount received of 336, and then bank of 8064. Guys, do we understand why I'm doing this? Yeah. Okay. So meaning I have to go to the discount received account and I credit it, isn't it so? Where this double entry is complete, and also in my bank account, and I credit it. Isn't it? Okay, so discount received around here on 11th of Feb. I have 336. Yeah? Sorry? Okay. My words. January. Yeah? So I'm crediting it with trade what? Trade pay. Or someone can put Hajan what? Hajan Sons. Are we together? Yeah. Discount received. Then I also go to my cash book. My cash book, I have to credit it on 11th of Jan. Trade payables. Trade payables. How much money? 8064. And because it's reduced by 33 what? 336, the discount received. Okay? You record it there. 336. But putting it there, it doesn't mean that we have credited discount received. Are we together? Writing 336 there doesn't mean that we have credited discount received. This ledger is not for discount received. Think up there, you see the word cash book. Not so? That is not its ledger. Okay. Now, the same thing that you did in the trade payables, you have to do it in Hajan Sons account. You remember our subsidiary ledgers? Yeah. I hope we haven't forgotten the subsidiary ledgers. As you're filling in your trade payables, don't forget the payable subsidiary ledger that relates to that name. Are we together? Yeah. So in my payable subsidiary ledger of Hajan Sons, I'll have a debit. One debit will be going to discount what? Received of 336. And another one is going to bank. Of what? 8064. Yeah. I think that is it. Should we move? I think we should move. Time is running super fast. Also, Maseruka Retail Enterprises also settled their what? Their obligation in full. So Maseruka, we sold to Maseruka, the terms of the sale were that if he pays within 2 weeks, we give him a 3% what? Discount. It is the same thing, it is related. So what are we going to do? How much did we demand Maseruka? So we are demanding Maseruka 4.5. So the data is 4.5. And then we are giving him a discount, which is a discount allowed. How much is it?
135.
135. So if we less, what actually are we going to receive in the bank?
315.
4 point? Like that.
Yeah.
4.365. That is what we are actually getting. So the money that you're getting in the bank, what is our double entry going to be like? So crediting bank. Crediting bank, are we losing money? We are debiting bank because we are receiving, not so? How much? It is 456. 4365. 4.365. And then you have to write off the what? You have to write off the receivable, not so? Because you had a right to receive. When he pays, you no longer have a right to receive. Derecognize it. You debited it when you are recognizing. Derecognizing, you do what? So we are crediting trade receivables. But with the entire figure, not so?
Yes.
You recognize a right to receive 4.5, not so? Now the guy has paid, but you have given him a discount. He has paid you less. Are we together? So meaning you have to remove the entire right to receive. You cannot remove only 3.46. In your books, you will be remaining with a certain amount showing that you're demanding him, yet you gave it to him as a what? As a discount. Are we together? So as we're writing off, write off everything to show that you no longer demand him. Are we together? The difference between what you receive and what receivables you report is going to be a what? A discount, because there is a decrease in an asset, not so? Which means that we have an expense. So we shall have a debit of an expense called discount what?
Allowed.
0.135 million. So that is it. Can we translate it in ledgers? Okay. We have trade receivables, we don't have discount allowed. So let's just come up with discount allowed. People online. Our online people. Are we there? You know, slowly but surely the online team keeps on reducing.
We're here.
But 20. I think they were about, the number was here was about 20. Right now it is 12. Slowly but surely. I don't know what is the problem. Are we over speaking a lot of Please don't run away. Don't run away. If you haven't understood something, ask. You know, the problem is keeping quiet. Eh? If you keep quiet, if something has puzzled you and you keep quiet, then you are going to build on that. And that makes the class totally a mess. So say it out, however obvious it may seem to other people. That network is off. Guys, I'm seeing some people that are here already online. Is it the case? Am I off?
No.
But I think it is. Yeah. I don't think it is even administrative. It is individual. It is not.
Yeah.
And they have to add them. Because I've been getting requests here and I've been admitting. I don't know. I know I don't have rights to do that. It's supposed to be the others. But they have been coming, and for me, I've been what? All people have been removed because of fees. It is also very possible that they have removed because of fees. But you know, and things to do with money. Just keep quiet. Okay. Right now it is 11. Discount allowed. So we are debiting discount allowed with 135. And this is on 11th of Jan. And this relates to, as we are debiting, we are using trade what? Trade receivables. So debit discount allowed with trade receivables. Trade receivables. Then another debit is going to be where? In our cash book, not so? Yeah, in our cash book. So let's pass it. And it is bank. And it is bank. So still we are writing trade what? Trade receivables. The money is in the bank. That was 4365. Okay. Sorry? Okay, yeah, discount allowed of 135. Yeah, that's okay, that's right. Then we have to credit. We are going to credit our trade. Is it trade receivables? Yeah. Trade receivables, but we are having two debits, not so? So we have to show the two debits here. The 135 and then the 4365. This one is bank. And then this one is discount allowed. Yeah, discount allowed. Both of them are 11. So please do the same in Maserukas, not so? I will do the same in Maserukas subsidiary ledger. Because we don't want to have trade receivables showing 0, and then Maseruka shows us that we are still below. Please mute, Pastor Mande, mute, unless you have a question. I'm not going to pass the other entries. Please pass them in Maseruka's ledger. The subsidiary ledger, yeah. Then on 14th, what is happening? purchased a laptop 4.2 for his son who was at the university. The amount was charged to the business's bank account. This is a drawing. Business resources put to personal use. So what are we going to do in terms of double entry there? We're debiting our drawings, and then we are crediting bank, not so? Supposed to be bank, isn't it? Yeah, that is 4.2. 4.2 million. Okay. So what we don't have is the drawings account. So let's just come up with the drawings account. Normally, I don't like these minutes of 50 plus. These minutes, even the machine is tired. You normally want to always avoid them. But we have nothing to do. Let's continue. So we are debiting 4.2. You know, from experience, you cannot stop there and you say we shall start from there. Here, next time someone tells you, we are not remembering anything, you do it afresh. And you have to do it afresh. Because there is no way you can start from here now. From where? Some people, the other time they wrote in another book, this time they are coming with a fresh book. So let's finish at once so that you keep very well and safely, not so. In order to retrieve 1 week to the what? To the exam. So we are debiting drawings. That is on 14th. Yeah, we are using the word bank, 4.2. Then we go to the bank account. We'll credit it. We'll credit it. Drawings. $4.2. Okay. Yes. 20th. Picked his personal cash, shillings 250,000, and contributed towards his brother's traditional marriage ceremony. What do we debit and what do we credit? We credit cash.
Personal cash.
Hey.
Not personal.
Okay, no problem. It is okay. We are leaving this one also. Because of the business entity concept, isn't it? Because of the business entity concept. His personal cash is his, not the business. We cannot include it. On 25th, which is certainly the last one, Kafero paid wages to the shopkeeper, 500 cash, and also paid himself 1.2 through the what? Through the bank. So what are we doing here? So we are having wages, salaries, and what? And wages. So wages and then a salary. Let's split, because that's the question. That's what the question wishes. So we are debiting what? We are debiting wages, but we can just put one account, salaries and wages account. Wages, that is how much? 500 and then 1.2. Okay, 500. Then the salaries account, 1.2. And then we are crediting what? Bank, not so? Oh, okay, let's separate, no problem. So we are debiting wages and credit what? And credit cash. They came from different sources. And then we debit salaries, not so? With 1.2 million and credit what? And credit money in the bank, credit our bank account with 1.2 million. Yeah. But we are going to draw one account called salaries and what? And wages. We need to finalize, the machine is tired. Salaries and wages. Yeah, indicators that people are tired. So salaries, we are debiting salaries with bank. Okay, we have cash first, not so? Our cash of 500, and then we are also having bank, isn't it? We are having bank of 1.2. All of them were on 25th Jan. We can't see your whiteboard. Sure. What if they give you a balance sheet and other descriptions for transactions in that same month? How do you handle that? Balance sheet. If it is a question, you'll have to bring that question and we see how to attempt it. Balance sheet. If it is a question, just get a screenshot and you put it there. I mean, if it's a past paper or something. But someone is saying that they can't see the whiteboard. Are the rest able to see? Richard.
Yeah, I'm able to see.
Okay. If we have one person seeing, then it means that it has to be by default to the rest. So I think we are finished. Not so. Hey, I haven't taken them in the cash book. Yes.
Subsidiaries are only derived from the receivables.
Yeah, receivables. Yeah. Receivables, payables. Subsidiary ledgers are two. Data subsidiary ledger and then data subsidiary ledgers. Okay, so let's move. Let me fill in our cash book and we leave this place because people are tired. People are tired. Okay, so on 25th of Jan, we are having salaries and what? Salaries and wages. One is cash, one is cash, one is bank, so they can be on the same line. Isn't it so? The double. Okay, it is okay. Please do it the way we have been doing it, okay? After you have done very many numbers, you will see that you can leave it, okay? You can do it one line, but it is okay. You separate. Me, I'm adding because of space. Are we together? Me, I'm adding because of what? Because of space. So guys, put salaries and wages, cash, and then put salaries and wages down, bank, okay? But I think you see that there is already a duplicate, size and wages, size and wages. So one line is enough. One is salary and then one is a wage, but they are under the same account. Oh my. November 2023, question 4. It's okay. We shall start from there. Keep it. People are tired. Keep it in our next class. That should be the first question. Okay, so we are having 500, and then we are having 1 point what? Okay, guys, one is a salary, one is a wage. Separating would be okay if you also separated the two accounts, okay? A salary and then a what? A wage. But we have no reason as to why we should separate salary and the wage. Yeah? Salaries and wages, one account is enough. So meaning when you're taking it in your cash book, since there are 2 columns, just 1 line is enough. But even if you do 2, there is no problem. We are going to stop here because of time. But I have a small assignment for all of us. In whatever we have done, please balance off that ledger. Whatever ledger we have done, balance it off. Okay? Whatever ledger we have done, do what? Balance it off. Let me balance off only one. Which one should I balance? Okay, let me balance off purchases. Let me balance off purchases. Ascertain the side that is greater. The debit is greater. How much? What is the total? 32,400. Okay, then so that 32,400 becomes the overall total, not so? Then meaning, since we don't have anything this side, it will be 32,400 minus 0. But if there was something, you left the total, whatever is there. So meaning our balance is going to be 32,400. And I'm going to say that this is a balance carried what? Carried down at the end of the month, which is 31st of Jan, not so? Because the balances have to be at the end of the last day of the period. And if it is the balance brought down, carried down, then we shall have a balance brought. If you carry down on one end, on one side, you have to bring down on the opposite what? Opposite side. 32,400. 32,400. And that will be a balance brought down on which day? On 1st of what? Of Feb. On 1st of Feb. Is it a must to draw the cash book, or you can use T accounts for the cash and bank? It is okay. It is okay because the examiner didn't specify. So you can draw one T account for cash and another one for what? For bank. But still your double entry shall be the same. Eh? What is cash, put it the other side. What is bank, put it the other side. But I think it is better drawing a 2-column cash book and you just move if you have cash and bank. So guys, this is what I want. Shall we be able to execute all of them? Doing this. After doing it, then it will be easier for us to draw a trial balance, because the trial balance is, it simply shows a list of balances of these different what? These different accounts. Are we together? Meaning in your trial balance, you will have purchases, how much? Of 32,400. This is the figure here. This figure, the balance brought what? So meaning the side in which you're putting it in the trial balance depends on where the balance brought down is. Are we together? Because your trial balance has a debit and a what? And a credit. So purchases are going to be on the debit because the balance brought down is where? The balance brought down is on the debit. And of course, also knowing that purchases are expenses, so their opening balance, their normal balance is what? Is a debit, isn't it so? Yeah. Okay. I think that is it. If you wish, you can also go an extra mile and you prepare the trial what? And prepare the trial balance. Because if you have these balances, coming up with the trial balance becomes very easy. If you do that, I'll be grateful. I will put a question that we shall attempt in the group, okay? Not me. Me, this is where I stop, okay? Unless there is public demand, we may need to do another one. But if there is no public demand, we wish to stop here, for ledgers and trial balance. And then in the next class, I unleashed and yes. Yeah, there is. And I think I gave you last time, not so? Did I give you the trial balance format last time? Okay, I say it is account type debit credit. Are we together? Account title debit what? Credit. So the account title is like, and you put the balance on the debit. Yeah, it doesn't matter the order. Whatever you bring first. We follow what? The dates in terms of? You can't follow because dates they are in various ledgers. So any ledger you choose to start with, you can start with it. Okay? If you draw a T account without writing a date, please write the date. Write the date because a ledger must have a date. Must have a date, must have a detail and the amount. Are we together? And that's the same way I have been writing it. I don't think it can take a lot of time writing a date, doesn't. Avoid self-doubt. Please take it through. All right, thank you very much. We shall start from there. Okay. And I don't think on Friday we have a class, do we? No, we don't. So we can rest. We can rest.
Excuse me, sir.
It's not financial accounting. Do we have financial accounting? It's not there. Yeah, okay, you have others. So for financial accounting, rest. And you come back on Wednesday when we have forgotten, not so?
Excuse me, sir.
Thank you. You're welcome, please.
Hello.
Yes, please.
Excuse me. Can the principal
I do what? You're breaking.
on the is account type? No?
You're breaking a bit. Please, someone had a question, but they are breaking.
My question was, what are the particulars of a trial balance? Is it account title, debit and credit?
Yeah. The trial balance, it is account title, debit, and credit. Those are columns. They are like 3 columns. Account title, then debit, and then credit.
Okay. Their names.
Sorry?
The names. Is it account title, debit, credit?
Yes, account title. Account title or particulars.
Okay.
Yeah.
Because I finished the balancing off and to try out and expect the trial balance.
It is not balancing.
No, I'll finish to balance off my ledgers. Then to know what I can now be able to extract the trial balance and see the balance.
Oh, yeah. You can use that format to extract the trial.
Okay, thank you.
Welcome. Please have a good night. Let's meet again.